Welcome to this week's live ASX strategy session. Thanks for joining me. Great having you with me as always. Plenty to go through today, plenty of interesting things, some big swings in the stock market, a breakout in gold, a couple of interesting stocks to talk to you about as well as any stock codes that you want me to have a look at later on also. So should be a pretty full strategy session. As always, everything today is general commentary only, doesn't take your personal situation into account. Having gone through all of that, I think we should get straight into our charts for the week. Starting off with the ASX 200. So this has been a classic week for the headlines. So on Monday, 5 days ago, we woke up to headlines like S&P 500 plunges on tech collapse and ASX to fall sharply. So this is all on Monday. And then fast forward to today on Friday, and the headlines were US stocks rally on tech surge. And I was seeing articles with rocket ship emojis and the like. So what is this? Is it a collapse or a surge? And this is a funny thing with the headlines. They're one of the biggest emotional amplifiers of them all. And if you don't understand the underlying market structure, then I think they can leave you in a constant state of fear and anxiety. And you probably then end up being more likely to make emotional sell decisions on days when the market falls. So what does the underlying structure tell us about the ASX 200? What can we see when we step back and look at this chart? First thing I look at when I look at a chart structure, I look at the moving averages. I've got the 50 and the 100-day moving averages on this chart, and they are rising. The 50 and 100-day averages are in upward trends. The price is also, we look at the price for the ASX 200, it's also above rising moving averages. And we've also got several all-time highs over the course of the last year. And adding to that, there's a well-defined series of higher lows and higher highs as we go back over pretty much the last 12 months. So this, by definition, is a bullish structure. So when you open up your emails and you see a headline like S&P plunges on tech collapse, if you understand the structure, it might help put some context or some perspective maybe around those headlines. Now, the other key feature on this chart is this V-shaped recovery. We had the sharp sell-off, we had the big recovery after that. Now, it typically takes a whole lot of buying power to propel a market sharply higher, as we've seen in the ASX 200. And this is often a sign that there's strong underlying demand on the pullback. So it's something else to keep in mind when we're thinking about the market structure. When we bring all this together, I think the evidence is telling us that the path of least resistance remains to the upside. While sure, there've been some extremes in the headlines. They've swung from either side, from bearish to bullish. But the underlying market structure over all this time, particularly over the last 2-3 weeks, it hasn't changed one little bit. And I think when we look at this over the last couple of weeks, from the highs we had at the end of August, I've been discussing the potential for several weeks of consolidation. Big strong rallies often take some consolidation to work off that buying. So that's what we've been discussing the last couple of weeks, potential for several weeks of consolidation. And I've said that this could then set up the market for new all-time highs later in the year. Now, one of the possibilities that we've been through is that of a sideways move back into the moving averages. Now, we've seen an initial pullback to the moving averages, and now we're having a rally off those averages. So the question now is the last couple of weeks, is that enough consolidation to work off this previous rally? And is the market ready now to move on to new all-time highs? My thinking around this has been that the consolidation could last. Maybe it could last through September. So maybe there could be a few more weeks in it still. The market wasn't ready to move higher in July when we had this breakout. We had a breakout from this trading range, which had been in place for a few months. Broke out in July, wasn't ready to move forward, came back, and I'm not sure it's had enough time to consolidate this rally off the panic lows last month. So I think we could still see prices stall, maybe near the current all-time high. And if that were the case, then maybe we could get another retest of the moving averages, and that just builds out that consolidation. Having said that, though, I don't think we should try and get too clever around these things and trying to time the market for perfection and trying to navigate the exact course, because these things can play out in all sorts of different ways. As I said earlier, I believe the path of least resistance is currently to the upside. That's where all these things we look at point to: rising moving averages, price above moving averages, higher highs, higher lows. They all tell us the path of least resistance is to the upside. So I think the risk with trying to finesse every turn in the market is that we run the risk of the market running with when we're not ready. So from that perspective, I'm continuing to add to positions when the setups are right. I'm not fully invested at this stage. I've still got a sizable amount of cash on the sidelines, but I'm actively looking to increase market exposure in the event that prices do run. If we don't get consolidation, what if a consolidation doesn't play out and prices run? Well, I'm in the market and I'm actively looking to get more money into the market, rather than trying to pinpoint exactly what it's going to do next. Now, I think an important part of this story as well is having a look at the ASX 200 on an equal weighted basis. So let me just change charts. Now, this is the ASX 200 equal weight. So the bigger stock and the smaller stock have the same weighting. Now, what I think is important about this is it's also had a strong rebound off the lower end of the range, and but this is still a range-bound market, still very much range-bound. When you look at this, the range has been in place since April. It's been tracking sideways. Ultimately, I think the odds favour that this resolves itself to the upside. As I've said before, I think this is like, you look at the structure here. So we went from a strong trending phase to a period where the price action is choppy and it's overlapping. So they're all they're the telltale signs of a market that's consolidating. It's also whipping either side of the moving averages. And to add to that, we had a false break to the downside during August. So prices briefly broke to the bottom of the range, couldn't sustain that break and snapped back. So as I say, these are all signs of a corrective phase. Now, the equal weight hasn't been as strong as the ASX 200 over the last few months. And it's also, like, you can look where the price is now relative to its high. It's further away than the ASX 200 is. And a big reason for that is the banks. The big banks have been pushing the ASX 200. When you look at the ASX 200 on a market capitalisation basis, but on an equal weight, those four big banks don't have as much pull. So this is one of the reasons we're seeing the equal weight not run as hard. Why? And this is why I think we're seeing what the equal weight is showing. It's showing the broader market is generally more subdued at the moment. But the underlying message remains the same. I believe the odds here favour higher levels ahead. Like, once this range completes, I think the odds favour that it breaks to the top side. And the timing with the breakout is never certain. There's always going to be, we just don't know exactly what the market's going to do next. So this is why I say I'm actively looking to add to my portfolio rather than trying to finesse exactly where the next part of this movement may go. I'll show you a couple of interesting stocks in a moment that I think are worth having a look at in the current setting. And of course, I'm using those wide trailing stops. We don't know, as I keep coming back to, we don't know the timing of this thing, how the market may move next. So the wide trailing stops, it just tries to see off further consolidation, if that's in fact what we end up getting. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. Just shows YouTube you're watching. YouTube shows more people, and that helps me heaps. And now I'm going to move on now. We'll look at the small ordinaries and the commodities, look at that breakout in gold, and also go through some stocks that you want me to have a look at. But of course, that wraps up the free section. So if you're not a strategy session member, there's a link below. Click it, come on in, doesn't cost much, and hopefully you get a whole lot of interesting information and ideas for what I think is probably going to be a very small amount of money for you. Now, let's go to the small ordinaries.